right, what's up, YouTube and traders from around the world? It's Robert Falco from Real Life Trading, bringing you your Monday stock review. It is October 18th, and looks like a very small retest this morning for about 5 minutes on the SPY. I thought, hey, maybe we're going to fill this gap, and then we'll bounce. It was a very nice retest gap on Friday, and yeah, we had about 5 minutes of selling. And we bounced and rampaged all day long. So the bullish move, we held down here, we bounced, we retested. I do think that these gaps do fill eventually right here, but it could take a little bit longer than I know a lot of us think and would hope. But yeah, pretty bullish move. So looks like an inverted head and shoulders on the SPY. I could expect a little bit of a pullback, and then for us to go higher is what I would really like to see. But if we do come back up here and then retest after the earnings are over the next couple weeks, and then go higher into the end of the year, I think that one could be more likely, that second one. But we'll see. Things look bullish. If you bought dips, again, you're not going to buy all of it, right? You're not going to take all of your dry powder and throw it in down there probably, but you probably needed to buy some because every dip has been buyable pretty much from eternity on the SPY. And yeah, things look bullish. Here's the Qs. This gap is actually filled. You do still have this open gap on the Qs that I do think eventually fills, but it could take a little bit if earnings are pretty good over the next couple weeks, which they probably will be. It'll just be about how the market reacts to them. Again, I would like to see that retest and then have us go a little bit higher, but I think we could trade higher, then have our pullback, and then off to new all-time highs. IWM very sideways. Try to buy this as low as possible and then sell it into resistance. I do think that this distribution pattern ultimately does resolve higher. It's just small caps, they did have a really good run, so it going sideways for a while makes a little bit of sense as well. So that's my thoughts on the overall indices. I don't look at the Dow because who cares about the Dow? It's only 30 stocks and it's a price weighted index, which I think is kind of dumb personally. If you played this hammer on Facebook off of the 200, congratulations. I actually got a fantastic fill. I don't want to brag or anything, but at the low of that candle, it actually retested it Friday. I did sell today a little bit lower than obviously I would have liked to, but I told myself, hey, I'm not holding this over earnings. I'm going to play it for a quick bounce off of that hammer, and it was up almost an R today, and so I just took it off the table since I knew I wanted to be out before earnings anyways, and I had a losing day trade, so closing this made me profitable for the day. So I did close that swing trade on Facebook because I do not want to hold a short-term swing trade over earnings, which is coming up in the next week or so. But if you played this hammer, you made a little bit of money. I do also have a bull put spread down in here. I think it's 300 290. That is over earnings. I don't think I'll have to worry about that one, but we will see what happens on Facebook. I just wanted to update everybody on that. I think if you've watched any of the RLT classes, hammer candles off of long-term moving averages are covered in quite a bit of them. And this is one of the biggest companies in the world. Love or hate Facebook or Instagram or Mark Zuckerberg or any of that stuff, hammers off the 200. You almost had to try that little hammer down there. So I'm out of that trade for a nice quick profit. Only 4 days in that one, so I will take it. We'll see what happens over earnings. Tesla, just not the greatest day trades in here, even though there were some really good gaps. But if you've just been holding shares, or a lot of us were selling puts on this one, and you've been holding shares, this thing is trending just like an absolute beast the last couple of days. I will say, I just personally, has nothing to do with Tesla. Any stock that runs up into earnings, I don't like that movement. I would like to sell and be out before earnings. You can always reload or get back in or anything like that. But we've been bullish on it ever since this hammer back over here. And you did get another chance to retest. I mean, it hit the 200 like tons of times over here. Great hammer, went higher. A lot of people sold, reloaded a little bit, or maybe they added some shares on this breakout and then have been trading it bullish into earnings. Again, Tesla doesn't really do a whole lot on earnings because they because they announced their deliveries so far ahead of earnings. Like, we already know they're going to do really well. So I don't think it's going to do a ton on earnings. I actually think running up into earnings, it could have a pullback on the earnings number, even though the earnings are going to be great. That just seems to be a, buy the rumor, sell the news kind of event, or like, no matter how good they are, it might not be as good as expected. I also think that if Elon's not on the call, that could be a little worrisome to some people. Granted, I don't think he does a tremendous job on the calls, but I think it's important that he's on them. And if he decides not to join the call, which he hinted at last time, I don't think that that's great. We'll see what happens. Personally, I would sell some calls or put a collar on or something like that, trim my position into earnings because it has ran up. I think they announced, I want to say they announced deliveries this weekend, right? This October 1st to October 4th. I think it was like that Sunday or this Monday. So they announced deliveries over here. And so they've already had that run up. And again, we already know that they're doing well. So we'll see what happens. Traditionally, it doesn't really gap a ton over earnings, at least in the last like year and a half, pretty much. If you've been buying options over earnings, you've pretty much been getting hosed every single time. So I definitely wouldn't do that. Let's move on to Upwork. So I did personally get called away on Upwork on Friday. I got put some shares down to like $42.50 with the put sale premium. It was, 41 and change, and sold a call over here somewhere that expired. Sold another one. Did get called away for a little bit over 3R. Upwork traded into resistance. I would look to repurchase a position on this, or start building a position back into the between $50 and $52 is where I would look to start doing that. You can see a nice little channel. It did trade into resistance. It does have earnings coming up, so I won't really be doing anything until earnings. But Upwork, buy low, sell high, that did work. And I am personally out of Upwork. I think Jeremy sold some calls. I know Thomas Wong is in a collar, so a lot of folks protecting some gains, or selling calls higher. If you get called away, it forces you to sell and take a gain, which is oftentimes pretty good. Let's go over to Net. So Net, yeah, bounced off the, I mean, it didn't technically hit the 100, but for the most part, it hit the 100 and has gone up 68% in like 2 weeks. So it's a ginormous like lightsaber candle for the month of October. I would probably look to protect some of my gains if I was in Cloudflare, and or, I mean, heck, at least sell a call. I think there was like $5 up at 200 for November. Yes, that's over earnings, but dang. And this thing's up 68% in like 10 days, 12 days. So I do think that it is prudent to take some gains, trim, trail, use collars, at least sell some calls, something like that, in order to protect those gains, because we could, retest. Like, this trend is unsustainable. At some point, it'll go sideways and or pull back, because things can only go straight up for so long. Let's go over to Upstart. I know there was some drama with this over the weekend. I won't say this person's name so I don't get attacked on the FinTwit, but someone was on CNBC, was like, I'm in Upstart, I'm up 24% in 3 days. The reporter, I mean, I don't know this, whoever this person was, this reporter asked him, what does Upstart do? And the guy pretended like he couldn't hear him because he doesn't know what Upstart does. But he's like, I don't care. I'm up 24% on it in a couple days. This thing has been in a hell of a trend ever since this gap and go last earnings. It's ran pretty much all quarter. It's probably going to continue to do well. Maybe it chops around a little bit, runs up a little more into the next earnings, and then we'll see what happens. It's going to have a heck of an expectation coming into this next earnings. So similar to Net, I would trim, trail, collect, and protect some of my gains if I was in Upstart. I'm not personally in Upstart. But for those that are, congratulations. It's looking super strong. I would just, again, want to protect some of those gains. And if you want to check out that interview, it's all over Twitter. You can find it, and it's kind of funny, and there's nothing wrong with a little bit of laughter. And then there was some back and forth with some folks on Twitter this weekend about good old Upstart. So that is what I have for you today. Don't forget to comment down below with the stocks you want us to review next, and smash that thumbs up button, like, subscribe, and make sure to also check out, if you go to Real Life Trading, we're reteaching Dan Jansen actually is reteaching the beginner class next week. I think it is on here. He's reteaching the beginner trading, next week. I thought there was an invite for it. I'll post it on the Wednesday stock review, but Dan Jansen will be reteaching live the beginner trading course next week. And yeah, don't forget to check that out. And love life, live life, trade it, everyone. Thanks so much. Bye-bye.